2111.64. 1.8 billion shares, so volume is fairly light so far today. We haven't had a lot of volume down. We haven't had a lot of volume up. Even the up days are maybe 3 billion shares on the New York Consolidated Tape. And if you've listened to me, we talked, I think, about Monday and maybe last Friday about escape velocity to get at least into orbit or out of orbit and go to the moon. You got to be doing a certain amount of miles per hour. And geosynchronous, I think, is 25,000 miles an hour, a little bit faster than that, and you're gone. But we just never had that on the upside. We just had everybody was pulling their punches. Everything pretty much above 2108 sees as a light volume, wispy trading. You can call it, if you're a sailor, the doldrums. And even though, if you listened to the show yesterday, I'm 100% short. Let me put it that way. I'm betting on the market coming down. That doesn't mean it's going that way. I think it means, though, that there is a lot more money to be made on the downside than any upside. And if you're even just flipping quarters and you make 60 cents on one time and 40 cents on the other, you just got to keep flipping quarters until you make money. But I think this is a whole lot less than the flip of a coin. My belief is that there will be no deal with the Greeks. We talked a little bit about why it was. I think I posted a message in the Den yesterday. Right after my show, I saw an article from the Financial Times. And it had Greece. And 70% of the people aren't even paying their mortgages. Then I saw something out last night that said that they were a little low, that it's 75%. Because, of course, no one can take any money out of the banks, so no one can pay for anything. So you've got this Orwellian world that is encompassed them, along with a lot of descriptions today about the box that the prime minister over there is in, and that is that he basically got elected saying that he wasn't going to do any more austerity. In fact, he was going to get rid of some, and they're asking for even more. And I don't know how they come together. I think Tom's right. They're better off out of it. I don't believe that they have to be part of the EU. And in fact, I think it would probably be better for the EU to have a couple of sacrificial lambs out there that are just failed nations, showing what people, when you do leave the herd, what happens to you. The wolves come. Some people said, well, you can't push the Greeks into the Russians' hands. And the Russians are broke, too. They need about $100 oil to keep anything going. And at $60, it is horribly destructive. They spent almost all their money trying to redo their naval fleet and their army. They don't have any money for Greece. If they did, then they're probably going to go right back to the 1980s where we outspent them and they went broke once again. Which probably not a bad way to do it. Probably, but for them, they've got bigger problems. They've got China on their heels, and China could make them look like wimps if they throw them off those Spratly Islands and some of the other island chains. So Russia has bigger problems than us, really. They like to look at us because our foreign policy is based on, weakness, cowardness, acting like we're not going to do something. I guess we're not acting. We're basically saying that we are back to the 1930s where we have no interest in the outside world if we can avoid it. And evil always abhors a vacuum, and it's pouring in to that as we go. Anyway, we've got a lot of stuff going on here today and a lot of stuff to talk about. But as we talk, we're down fairly close to the lows, 12 points. 13 points off on the S&P cash is not a ton. This is not the end of the world if you are a bull. In fact, I'm not feeling all that comfortable as a bear. So why should you feel all that reticent if you are a bull? 10 points is really, or 12 points is really nothing on the S&P cash. We closed below 2,100 on the S&P today, and I would say that you probably would want to be a little bit more worried. Yesterday, like I said, we went in the newsletter, on the daily newsletter, I went 100% short. And it's one of those things where you just have to look and see what you think and take your best estimate. I was buying puts on a lot of things going out to September, October, and November. These are some pretty big bets with some pretty big price tags on the options. I think we'll be doing okay, and it's going to be these sectors that are going to crack hard that we're seeing weakness in today that I pretty much was focused on. We've got a few that are, I got one or two that probably not going my way. A couple that tried to scare me out this morning. They were not successful. But we'll continue to talk about that as we go through the rest of the day. And, of course, I've digressed too much already.
That it's all just a little bit of history repeating.
1997, the New York Stock Exchange begins quoting share prices in sixteenths, named sixteenths or teenies. In theory, this narrows the spread between the bid and the ask price. I was there. I can tell you it didn't, increasing the net return for investors. But on Wall Street, the law of unintended consequences governs almost everything, and what you see is seldom what you get. In practice, the move to tennies makes filling large orders at a good price much harder, raising the cost of many trades, especially for institutions. But it got much better. Basically, this went on for about a year and a half, about 1999, and Schwab really got active on this and started filling orders, and everybody else had to follow suit. Yeah, I think follow suit. But on this day in 1997, started seeing a few of them, which is kind of interesting. The NASDAQ really got involved. I think it was 1999 or 2000, maybe 2000. But by, I think, 2003, there were no, the decimalization had all taken over. And you could buy stocks in quantities of a penny higher or half a penny. Didn't matter. It's whatever was out there. Anyway, we're going to get to what's going on in the markets. Eurozone, of course, about 6 o'clock, I was actually up. I couldn't sleep last night. Woke up about 3:30 in the morning and got a good book, sat down here and had the TV on to see NBC World Markets over in the corner. Wasn't listening to much, and about 6 o'clock rolls around, and all of a sudden the announcement comes out. And at that point, I think the DAX was up, if I remember right. Anyway, I think we were probably just about flat on the S&P futures. The S&P went down to about minus 10 on fair value. They continued to push this thing all the way up through pretty much about 11 o'clock, and there was just no volume. It is a ghost town for buyers. It's a ghost town for sellers. The problem is you got to have a buyer if you want to be a seller. And right now there's just a few more sellers than there are buyers. It's not that big, but that's how things change in the marketplace. It doesn't have to be huge all the time. It can be small. Anyway, 2/10 for the UK. They're kind of probably benefit to the weakness in Germany and France. When we look over to Asia, if I can get there, Nikkei was up just a quarter of a point. Shanghai up 2.5. The Hang Seng up a quarter of a point. Shanghai is trading much like the dot-com boom of 2000. And my guess is that half or more are going to lose every penny they put into that when the music stops to the game that they are playing. And it's gotten even worse. Yesterday, they had over a million in one day. I saw in an article, 1 million new trading accounts in one day. They've been doing 1 or 2 million accounts a week. They did 1 million in a day yesterday, which tells you probably everything you need to know about Asia. That is, it is a monster bubble, and a lot of people are going to be cleaned out. But we need to continue. Carl Icahn was out. Some people are blaming him. The volume was light before he got started, but he is out of Netflix. He tweeted that before the end of the day. They were able to go and sell into the market yesterday on the announcement of the reverse split. Mr. Icahn, he doesn't like probably hanging around too much with the local ma and pa trader, but at the same time, he is one of the premier operators in the United States and worldwide. If you're not familiar with what a stock operator is, there's nothing new to it. There's a great book called Reminiscence of a Stock Operator. I recommend it as the #1 book to read. It gives you a good history of how things worked in the past. And fundamentally, there's nothing really different since the days of 1900 or even just a couple of years before that and today. They are different in character. In actuality, they're not that different. But a great book about Jesse Livermore and becoming a 14-year-old guy working in what was known as a bucket shop. That's where you basically bet on stocks going higher or lower, but you didn't actually own any shares. You just watched the ticker and you had 10-to-1 margin. So if a stock, if you had $1 and the stock moved 10 cents, you were wiped out. If it went the wrong way, if it went the other way, you made a lot of cash. Unfortunately or fortunately, there were a lot of people that set up these bucket shops and were playing games with them, and they'd clean them out. But why it lasted, the people that ran the bucket shops made a bunch of cash. One of the things that did go away after some big problems in about 2008, or excuse me, 1908, was those bucket shops. It made the market a little bit better. Each year we find out the weaknesses in the markets. We try to patch them, and they find new ones. We'll be back in a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, we're talking about Carl Icahn and what's going on with him. Most interesting to me, he's got one of the biggest trades of the last, if it was all his money, it would be the biggest trade. There's people that have had bigger trades with their cash alone, but a pretty big trade for his company. And it basically started off with $321 million, made about a little over $2.1 billion on the trade. So not a bad trade buying Netflix, but he was an operator. He knew what was going on the inside. The problem is on the outside, you never know. And sometimes these things work out well. He was able to do it, keep constant pressure on the CEO to push. But all these traders know one thing, and that is what I say at the end of every show, and that is sell when you can, not when you have to. He found a market that he could sell into, and that's all that matters. When you've got that much stock in a company, you've got to have a willing market. And I was talking about that reminiscence of a stock operator where he was caught in several trades, and he would make a market by fooling people by buying other stocks that were in the same sector or running up wheat when he had a ton of corn that was eating him alive. There's all these guys that they've got all their tricks. They haven't really changed in anything. If you had a couple of billion or 30 billion of your own, you could manipulate the market. It's not that hard. The principles have been around, like I said, since at least written down since the 1920s and 30s. So there's nothing new. But he did have some comments out there, and they ran about 18 minutes long. His interview did today on CNBC. Unfortunately, 15 minutes of that was an advertisement on why you shouldn't sell Apple. I'm wondering if he is not selling Apple in the background. As soon as he leaves, he's under no obligation not to sell it. But I don't know if he will or not. He's made some ideas that he's going to hedge the market, but he had a couple of comments. I'm going to play a couple of them now. I'll be back in the 4 o'clock hour. We'll be talking about a few more of the comments in that hour, too. So we'll kind of split them up here because there are a bunch of them. But, he's been around a long time. Always, there's lots of people like Buffett who do have good information. Unfortunately, it's almost always couched in really, really bad information. And I've whittled it down to you to maybe about 3 minutes of stuff that is not complete balderdash and at the same time, well worth listening to. So we'll start with this first clip here and see what, I can't remember what he was talking about.
Yeah, I mean, there is some concern there, but I think you're very right. I'm very concerned about the market, and I think the market is overheated, especially the high yield market. And it's sort of a sad commentary because I think the public is walking into a trap again, as they did in '07. And what I've said is,
basically he goes on, but that is kind of exactly the same thing he put out in a press release or in a tweet or sent it on a bird's leg in cryptic code. Somehow he got that out this morning, and a lot of people said that's what moved the market down. To me, the market was looking for any reason to sell. There was no volume well before that he came out with that. But I think what most people are really reacting to is not his general market call. But when you see somebody big cash out of $2.5 billion, or $2.5 billion almost of a stock, you always think maybe he knows something that you don't know. He did in the interview kind of dance around the issues with Netflix. I think he knows. He started selling Netflix at $375 a share and bought it pretty much at an average of about 56 bucks, I think, or 58 bucks a share. It's always nice to get out when you can. You made a lot of cash. Don't be a pig. Get out. But more than anything, what rattled the markets when he did do the interview is his discussions about bonds. And we don't have enough time for that right now. When we come back, I'll play you the clip about bonds. But I think that's what made the market start to wet its collective pants. And we'll talk about more about that. But it's all about horrible risk-reward scenarios in the bond market, how he thinks it's going to spill over into the U.S. market, and how he thinks that a lot of these stocks, especially the tech stocks, their earnings, they're frauds. I think he said it 3 or 4 times. We'll talk about more about that when we come back. You can give me a call at 877-927-6648 or email me at path@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we briefly kissed the floor. We're at 2111 on the S&P cash. Broke the low. Not a lot happening out here, but we'll continue on. No real bounce out of here. What we're up, one and a tenth point, something like that. Not a lot going on. Anyway, we're going to get back to what was roiling the markets, or at least what Financial Infotainment was saying. But did start really to see this market start to move once Carl Icahn started talking about the thing that no one wanted to hear about in the markets, because if you're forewarned, you can't say that you didn't know about it.
A no-brainer in my mind is the high-yield market, because it's almost ridiculous to go in and buy a high-yield bond today at 5.25%. So that's a single B bond at 5.25%, when you can actually buy corporates, single A corporates that really aren't going to go bankrupt. There's almost no chance at 5.25%. So for 2%, people are risking 40%. I mean, it's absurd.
And that's really, I think, what got a lot of people going on, is that he was getting into the whole liquidity issue with these bonds, and the fact that people were looking for just a taste, just a tick up, just almost nothing, and for a huge amount of risk. And, you know, there was a lot of discussion about bringing in hedges in the market, and I think he finally started to get through to a couple of the traders in fast money that maybe risk is part of trading. Maybe the markets don't only go one way. I don't know, some of the ones that are into options basically saw what I saw yesterday, which was an incredibly low number for what any option, any put option was selling for. And you know, you've got to take those bets, even though you're not 100% sure. Those are the ones that are going to pay off really large. Like I said, I'm already out into options that are into September, October, and November. And I'm looking for a long-term slow move down, kind of like today. Can you imagine every day being this way, where it just slowly drip, 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 lower or lower? I don't think it's going to come fast. I think the reality is that the Fed wants the air to come out of this rather slowly, and they're going to do whatever they can. But they can't come out one day and say, you know what, we're raising rates in September and December, and the next day going, no, we can't. But well, what else can you say? Carl made a load of cash. He had a load of cash to start with. It certainly helps when you want to make $1 billion to start off with 18 billion. And that's what he did. I think he had 18 billion a couple of years ago. I think he's 30 billion now. So he's got a lot of cash. Anyway, that's pretty much it for the snooze. We're going to get to stocks here fairly quickly today as I get warmed up. Let me redo some of the stuff I'm looking at here and see if we've got some interesting moves. SCX, of course, splitting in twain. And one of the stocks out here that's not doing too badly, gave about half of its pop up today, but volume was a little bit better. This trading range that pretty much goes to about 20 and a half, maybe $20.60 is where you start seeing sellers come back in again. My guess is this is going to take a little while, if you are bullish on this, to at least consolidate out. No U bottom in that one. Yes. SCCO. Another one out here where everybody is thinking these things are just all V traders. A little bit more out here in the metals with Southern Copper. Volume not really exciting. And again, these things are just in kind of a trading range. This one from about 30 to 31 bucks. It got over that this morning. It's back under it again. So there's not a whole lot there. Again, you're going to need China probably come to the table to get these metal companies going. And right now, there's nobody to order it because they're all at the gambling casinos where they're playing the stock market. It has become ludicrous over there. So what else do we have going on out here? Oh, the one out here that gets downgraded and gets the PIR horn is DEG, Delahayes Group. This had a big pop yesterday. Again, I've been warning about these stocks that don't have enough juice to reach escape velocity. This one is a big reversal and a big gap down. Just take a look at their profile once again to take a quick look and see what's going on. Together with the subsidiaries, operates food supermarkets, also operates other store formats, cash and carry, specialty stores, and company sells its products in affiliated stores that are operated by independent third parties. Delahayes. Don't know a lot about them. Anyway, another good example of that going on. What else do we have out here? Monsanto, MON. Missed out here, beat its Q3 consensus by 32 cents, but missed on revenues, and that's what everybody's keying off on these days. Sees break-even fourth quarter results below consensus, though, and said that basically what they said before, they're saying it again, but off about 5% and back down to these lows. And I guess I'll have to get a new T-shirt. All the kids, of course, a child of the 70s, all the kids that were into dope in my age group, if they wore Monsanto T-shirts that had, without chemicals, life itself would be impossible. And with the dopesters. Anyway, 7.8 million shares on October 8th, 105.76. We haven't hit that yet, but boy, we got 7.5 million shares already, and that looks to me like everything you need to know. We got a little bit of movement out here. ALNY is another one out here. It was off about 4.5%, and that's Align Pharmaceuticals. Again, you get this volume or some volume out here, but it's normally, it's just not really doing a whole lot for you. You broke the previous high in this one that only had 1.3 million shares on April 21st with 2.3 million shares. So I wouldn't have been shorting it, but it couldn't hold the highs. Next day, it only gets 564,000 shares. And then, of course, reverses yesterday and even worse today. Volume is not real big. Like I said, I wouldn't be shorting it. On the plus side, we've got Lennar up about 3% on earnings. It had a little pop. Energy is okay. I've been thinking that we're pretty much tapped out on the earnings front. This leg that started on June 9th and up has not brought a lot to the table. My guess is this is going to reverse fairly quickly. And if you look at this thing, what it's more likely is a lot of these building stocks are starting to make Gartley patterns. And I don't like pulling a Gartley here and shorting it on a pop like this. But others in this sector probably look a lot more tasty out here. DRI is another one. DRI. It was up about 3% and just some routine market manipulation. But you just see these all over the place, which is these high volume reversal days yesterday where they gap up, can't hold their high. They're back into it today. This thing's actually coming back into it a little. Of course, they're talking about splitting their restaurants out. A lot of this is all financial engineering. There's nothing that changes the underlying business conditions. EIGI, EIO, I think. Endurance International Group, this one, a little pop down out here, and more discussions from the market. But this thing's been going sideways here for a little while. Not a lot of volume either, so not much in that. We'll get to the stocks that I'm looking at now as we check back into the market. 2112 on the S&P cash, just 2 billion shares. Boise Cascade, looking at these, certainly looks fairly weak. BCC is the symbol out here. This thing gapped down on pretty huge volume on the 19th of February, got back into it on April 22nd with 770,000 shares, into it with 460,000 shares yesterday. Not much of a signal out here saying everything's going to hell in a handbasket, but you know, you still have probably a trading range, maybe back down to $34.35, probably in that range. But a lot of these, a lot of overhead resistance in these stocks, and a lot of juice as you break those highs. Another stock that looks like it's completing its ABC up is this Beacon Roofing Supply. And the whole housing industry out here looks weak to me. But what is really telling to me in this Beacon Roofing Supply and confirming my, at least so far, my thesis that housing is probably ready to roll over big time. May 6th is the low, $29.44, all the way up to yesterday's high. Just had no energy whatsoever. And it's only $3.50. But again, you should have had 750,000 shares yesterday. You poked through it, you had 529,000. Today you got 156,000. Is it going to roll over instantly? The answer is no, but it does look problematic at best for a lot of these stocks. Again, you know, you see a lot of this stuff. Just got to send a new note out here. Okay, Dollar Tree. 2 dojis out here. Keep an eye on this one. I'm thinking that maybe this thing is ready to make an ABC down. So much in this sector seems to be wildly over pushed. If you do get into the expansions out here, see if we have 84. What am I looking at here? Is that it? No. This Dollar Tree looks to me like that's the A. This would be the B point, and this would be the C. So you did a 68% retracement out here, and then this thing goes sideways. That's this big, huge day of the 21st. And that is pretty much changing stuff to that. But yeah, it's, I don't know. I just don't like those two dojis on the right-hand side of this chart, making me wonder a bit. Dunkin' Donuts. I've got a gift card to Dunkin' Donuts. I'm not a coffee drinker. And I'll go, in fact, maybe I'll go do it tonight. I have about 1 cup of coffee a month, and then I'm up for the next month. But this one certainly, I think we were talking about it this way. Well, I got a gift card for it, so it's free. So we'll talk about that. Anyway, April 24th, 2015, $54.60, 9.5 million shares. Got into it yesterday with 1.8 million shares. Today, pulling back on 800,000 shares. But again, not a lot of juice. A lot of these things look like they're in bigger trading ranges. To me, you'd probably want this thing to come back down to around 49.50 on light volume, and you get about a $5 trading range out of that one. Got a question in the den. SRS. Should I buy it? UltraShare Real Estate. You know, I think you just about anywhere in here, I think you'd be fine. If they're raising rates, it's going to kill housing. You know, to me, a lot of that is already baked in. This thing came off of 99, you know. So how much is in there? Is it, you know, can it get back up to that 99.20 eventually? Going to be tough. You know, I think you're going to get a day or two that's probably pretty good in this sector, especially after the earnings. And then everybody's going to figure out, everybody's been racing to the mortgage broker to get in these deals and get these houses at the last minute. And probably going to see a little bit like we saw today. And then we will be taking a look at higher prices. So, you know, if we could just pull back a little on this, anything, any day that you get a retracement on this, I would probably buy SRS. Let me put it that way. Anyway, we'll be back in just a minute. We will be back in the 4 o'clock hour. We'll be doing Tom's show. So we'll be continuing on with more Icon Speak in the 4 o'clock hour, along with how the markets wrap up. Anyway, 21.11 on the S&P cash, 2 billion shares.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We were talking about ultra short real estate when we left, and I said, yeah, if it got a little pullback, I'd probably get back in it. But I think there are better sectors out there. I'm not short real estate. There's a lot of stuff out there. I just think that it's pulling back. Probably for the reason, at least for me, is most of those housing stocks have already severely come off their highs, so there's nothing new out there on that. Demandware, I've been watching this one out here pretty close. Not enough to pull the trigger on this one, but seeing a lot of stocks out here that are testing their highs or have tested their highs in the last 2 days and didn't have higher volume. Demandware was one of them, DWRE, so you may want to keep an eye on that. So what else do we have? The second. One more time. Okay. And I sent it again, Steve Rhodes. Steve Rhodes was asking for something. Echo Global Logistics, ECHO, 1.5 million shares on the April 22nd high. And yeah, we're back into it. But we had about 810,000 shares yesterday. So like I said, a lot of these stocks, they've taken off. You've had a sign of strength and signs of weakness in these. And you certainly had that in Echo Global Logistics, ECHO. But you needed 1.5 million shares. The thing is, on this one, this thing came down with monstrous volume in comparison. Where's it back out here? Yeah, it's about 5 million shares. Let's zoom in on this here. Okay, yeah, it's at high volume low, 5.7 million shares of April 30th. So you got to figure that's going to get tested out here. You like getting back in, but certainly don't like getting back in with heavy volume that we saw here so far. Let's see what else we have. Okay. 5. Hopefully my internet will come up here. We've been looking at this one for a while. This is a recent IPO of $5 stores. Most of their stuff's $5, like a store that's $1. They're in the mall, shopping malls. I've never been in one. This thing gapped down on huge volume of 10 million shares on the 9th of January. It's been working its way back in to fill this gap. We had 1.8 million shares yesterday and a nice little doji, and then a little reversal back out here. But my guess is this thing's probably going to go to the bottom of this gap up that we saw back on the, June 4th. So you've got down to about $35 on this one. So looks like it continues to be an issue. What else do we have out here? Intrepid Potash. 1.4 million shares. We're talking to this. If you listen to Andy Heck's show yesterday, I sent him this chart just because I thought it was so interesting out here, and you don't hear a lot about potash. It was about 2 years where people were trading the living daylights out of it, but it did and has become kind of problematic. $10.92 on that previous low, March 19th. Just 950,000 shares yesterday. It stayed in the trading range. What I really like on this one, I would have liked if the energy was a little bit more from March 19th back up to April 29th. But you had we're out of time here. Well, I'll see you back in an hour. We got Steve Rhodes following me here today. In the meantime, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.